this is the big story, the central bank FX, because the Central Bank of Nigeria's announcement around the foreign exchange market on Tuesday was one of the most profound policy statements by the financial regulator since 2021 started. It goes straight to the heart of one of the most difficult and pressing issues for the central bank and Nigeria as a whole, namely foreign currency and exchange rate management. Joining me for a three-part exclusive interview now on the latest development is Dr. Hassan Mahmud, Director of Monetary Policy at the Central Bank of Nigeria. Dr. Mahmud, we thank you for coming on the show tonight.
Thank you for having me, Boston.
We appreciate it. What is the new horizon for FX management by the central bank based on Tuesday's announcements?
Yeah, thank you very much. You are aware very much, and like all players, including analysts in the economy, of the teething problem we're having with exchange rates, particularly the persistent depreciation of the Naira, the constant pressure, demand pressure, and the shrinking of the supply side of it. And we've also seen that a very high pass-through from that behavior of exchange rate to inflation and for other parameters of the economy. So the link is so strong and is becoming more intensified, and then the bank needs to at least address a substantial part of those distortions coming into the economy. One big area that was a major issue was the behavior in the BDC segment of the market. It got to a stage that you could not differentiate between the BDC market or BDC rate and the parallel market rate or the black market rate. And you know, BDCs are supposed to be formal institutions licensed by the central bank with a licensing guideline with what you're supposed to do. And we flog this every day. This is the limit of the BDCs. This is the extension of what they're going to do. This is what's going to the banks for invisibles and all. It's supposed to be the retail end to moderate prices at that level because of the shocks we constantly see. We always regard that segment of the market as very little, insignificant, so it's not going to really impact on, you know, the other parameters of exchange rate. But with time, we've come to see a lot of noise in that part of the market, and that has generated a lot of issues around the transparency of the conduct of that market, and then there was the need for the central bank to come in to, you know, put things in perspective and allow the market system to, you know, operate in a very efficient manner. It became a distortion of friction within the market smooth operational mechanism.
When those announcements made on Tuesday by Mr. Governor, the stoppage of FX sales to BDCs, no further licensing and direct sales to banks, are they stopgap measures, or they represent a major paradigm shift in FX policy by the Central Bank of Nigeria?
Yeah. While that stoppage was done, and, you know, the governor gave emphasis to, you know, how we need to bend backward so much to accommodate that, given the kind of structures we find in the economy and how we need to meet that retail end of the market. And he also gave an example that nowhere in the world that you see a central bank, you know, spoon-feeding a FOREX window, a cambio, on, you know, giving them direct FX cash. So while that stoppage came, the window for anybody that wants to go into invisibles or any transaction of FX to go to their banks, you know, the banking system or the commercial and the deposit money banks, the visibility within the central bank, you know, monitoring system is extremely large and very efficient. Their transaction can be seen every day, and you should expect some level of responsibility given even the capital base and the professional base of, you know, those operating in that system. So what is going off the BDC segment, you can also access for those at the retailer that wants to do their BTA, PTA, school fees, medicals. They can also go to their commercial banks and take that those funds from FX requirements from their commercial bank. And we also gave a clause in the event that you don't get this. These are the numbers you call. This is the email you are going to email your complaints to, and we also gave the banks, you know, the matching order to disburse this fund with minimum, you know, documentation requirements, sufficient enough for them to be able to ascertain that this transaction is genuine.
Dr. Mahmud, my quick question on that was, those announcements on Tuesday Are they permanent? Will they be permanent, or as a stopgap measure, or it's a major policy shift?
Yeah, from the language the governor spoke, for now it is permanent. You know, there's no, it's not a stopgap that after 1 month we are coming to reverse this, or after, no. It is something that has been said. Even the BDCs applications that are under processing, all that is going to stop, and all funding FS requirements should go to the commercial banks.
Dr. Mahmud, we'll continue this exclusive interview with you after the break. Stand by, everyone. Yeah, today the CEOs of some of Nigeria's commercial banks held a virtual press briefing pledging their support to the central bank's latest decision to stop FX sales to BDCs and instead to commercial banks for retail transactions. Welcome back to my conversation with the Central Bank of Nigeria's Director of Monetary Policy, Dr. Hassan Mahmud. Thank you very much. We'll get to the level of preparedness of the banks in just a moment. But first, what will be different in terms of the operations of the expected results of the latest FX announcement, similar to 2016? What will be different this time around?
Yeah, this time around there's going to be, stricter monitoring, and like I said, the banks themselves know what is on their shoulders now, looking at where they're coming, where we are coming from, in terms of taking this off the BDC segment because of the distortions and the irregularities and the arbitrages that we see in that market, and so the banks knows that this is a more serious burden on them, and it's something that has to do with their reputation and the fact that the central bank has enough tools within its purview to monitor those banks and also penalize those that also fall off the line. So in terms of the efficiency of it, because we've also emphasized that these flows will go to the bank, so the supply side, as much as possible, the bank will try as much as possible to meet that side, and then the transparency of it will also improve for even other investors that want to have access to FX. So in terms of the results, we expect to see a better outcome in terms of the efficiency of the delivery of the FX, transparency in the transactions, the documentation that will be required will be verifiable by both the regulators and even the banks that are supposed to disburse those funds. So we'll see that much of transparency coming into that. All other round-tripping cases that we found in the BDC segment that were beyond the limits of their approved license, we should expect that to all fizzle out now, and then we'll start seeing some moderation and smoothing in terms of the behavior of FX rates in the market.
Okay, so is the latest move on the market by the central bank in line with the advice by the World Bank and the IMF asking that the central bank narrow the several exchange rate windows in Nigeria?
It's the conversion or the issues of exchange rate conjugation to a common platform is completely different from what is going on now. It's part of the issues, but substantially the price, distortion that we saw in terms of BDC transactions or in terms of that market transactions, several of the times when people make analysis and stuff like that, they refer to BDC rate. Invariably, they are referring to black market rates, and even multilateral institutions also use that rate. And we keep saying in the central bank that that is not our anchor rate. That is not the rate that is reflecting the fundamentals of the market. So for that, distortion coming out of the system, the international community will also see that, there's transparency. The rates, whatever rate it is not the issue. It's the price discovery mechanism that brings about that rate. If it is a reflection of the fundamentals of the economy, it's a reflection of demand and supply in the economy, it's a reflection of trade, movement or trade volume of the economy, then or even services, then you start seeing some, trust, market confidence in that segment. So invariably, everybody or all players, stakeholders in this, I think will take this as a very positive move by the bank and a very bold move to, address that distortion coming out of that market failure.
So at any point, because you need to allow the market to determine the price, if it is actually a market, perhaps like you have in the stock market, in which the market of demand and supply order, whatever is allowed. But here is the central bank is a major player in terms of intervention into the market at setting rate to a segment of the market. It used to be the BDC, now to the banks. Do you think this will keep the rates not really at market price level?
I think this will also bring the rate to a kind of an efficient equilibrium point, in the sense that these same retail transactions that are going on in the BDC, it's not that you don't have access to those transactions or you don't have access to funds to do those kind of transactions, but you get them from a different platform, a platform that is more dependable, that is more trackable. So it's not that those services, those retail end of it is going off the market. That's not what is. And even the new rule does not even say that BDCs are banned. You know, so if they can raise their funds from other sources, fine. But for this transaction, because we want to meet the domestic demand for this, FX requirement, this is an alternative window where you can use to get this. So if you still have access to that, I think from now you start seeing a more efficient price mechanism in terms of the rate that we are seeing for the invisibles. The ones that go for school fees, BTA, PTA, and all the medicals and travels and stuff like that. I think that big, because we know in the past that central BDCs get their FX at a particular rate. Central bank gives the BDCs as a particular rate, and there's a margin that is already agreed to be paid on it. But nobody goes to the market and get that rate. The banks cannot do that to you because you have a board there that tells you what is the buying and selling rates. And if it's going beyond that, you can as well query the bank or write to the Central Bank of Nigeria.
But at what rate will
and that is monitorable.
At what rate will the central bank now be selling to the banks?
Well, for now, I don't know exactly what rate is going to happen. But that will be, within this structure that is coming up now, that will be agreed. But most transactions now are NAFEX plus a particular percentage, 0.22%, like that. And so I don't think there will be much deviation from that. Don't forget that we used to give the banks, FX for invisibles, $100 million. So there was a rate that was being used for that. I don't think that there won't be much, difference. The rate is not a fixed rate. So we call our exchange rate regime managed floating rate. So that will depend on the movement in the NAFEX market. But I know it is a margin above the NAFEX rate that plays in most of this market, because the NAFEX rate from our own understanding of the behavior of the market reflects the real demand and supply determinants of FX rates.
Well, here the commercial banks said this afternoon that they are prepared and ready to work with the central bank on the expected surge in customer demand, which are expected. But as it's been explained, it looks like as a customer, I could go to a bank and I could as well go to a BDC for my BTAs or PTAs or school fees if I'm doing any of that abroad, which I'm not. So is the central bank ready to meet the supply side here, which has been a major issue?
Boston central bank cannot meet the demand of the entire economy because we don't print dollars. So it's a function of how much inflows we get. So while we're also working on getting alternative supply sources, we're also managing demand. And one of the measures to manage demand is to curtail unnecessary importations or unnecessary issues or unnecessary demand for FX. We don't want FX that will use to get something in that will impact on the economy positively. So we don't want demands that are just frivolous or that are just for store of value. You just want to dollarize the economy, just take some dollars and keep at home, and you think that that's a save of value. We don't want those speculative use of FX, and so those we must manage with some of our administrative tools to address that. But to say that we can meet 100% the entire demand of the economy, including both the ones that are genuine, those the ones that reflect, that will impact positively on the economy, definitely no bank in the world, country in the world can meet that. But genuine demands that are important and that have, credible documentations definitely will be met.
Well, you see, Dr. Mahmud, let's chat to those very weighty allegations of FX misbehavior by the BDCs and others when we come back. Those announcements made by the governor, we'll revisit a few of those comments when we come back after the break. We need to go back to that and have an idea, again, what happens to the 6,000 below the change moving forward. Stand by. We appreciate your time with us this evening. We'll be right back into Dr. Hassan Mahmud. Yeah, this is a rice exchange. Now, the Association of Bureau de Change Operators earlier today issued a lengthy statement stating they remain in business as retail of FX. The BDC operators say that while the central bank direct FX sales provided ample supplies to them, the BDCs will continue to get supply from other sources. They also pledged to work with the regulator to deal with the allegations by the central bank and deal with members who flout those central bank guidelines. Let's get a short recap of what the central bank chief GODWIN EMEFIELE says on Tuesday. Take a listen.
It is a primary role ascribed to us by law that we should do what we need to do. And you will all recall that Nigeria remains one and the only. There were countries who were selling, whose central banks were selling foreign exchange to the bureau de change operators. At some point, they dropped the idea. We have, as a result of requests and pressures, continued to do this. And we've done this to see to it that that those who operate in this market, that they are able to do so because we seek an opportunity to create business for them. And we believe that as long as they do this, not only for their benefit, but for the benefit of the economy, that we should continue to support this initiative. Like I read in my remarks, we have become very disappointed, concerned about the activities of our bureau de change operators in Nigeria. We are unhappy about it because they have turned themselves, rather than being supportive in line with the objective, which is for them to sell dollars to people who immediately need to travel, about $5,000 or less. They have turned themselves into agents that facilitate graft and corruption in Nigeria, and we believe that this cannot be tolerated. The CBN has also been awash with complaints about the modus operandi of operators, and it's becoming so disgraceful that we feel that at this stage we need to take a decision. The Monetary Policy Committee did deliberate extensively on this, not at just this meeting. This is an issue that even our leaders, even the political authorities, have engaged the central bank on. And we've tried our best to see to how we can defend the bureau de change operators. And put bluntly, even our leaders who constitute the political authorities have raised concerns about the modus operandi of bureau de change operators in Nigeria. We did our best to defend it, to say that they play certain roles in the economy. At this stage, we can no longer continue. So if you ask me the question, are we carrying the political authorities along? I will say the political authorities themselves have long sought that this should stop.
This is my final lap of discussion with Dr. Hassan Mahmud of the Central Bank, Director in charge of monetary policy. Very quick one. Where does the 6,000 plus bureau de change operating in Nigeria go from here?
They are still there. We didn't ban BDC, we didn't revoke the BDC licenses. However, the governor also added that all other BDCs in applications that are being processed at whatever stage they are in will all cease continuation of processing those licenses. And those ones, they have the liberty to ask for refund, which is the option available. And the bank has also set out procedures to do that refund the Financial Policy and Regulation Department has already made that public, and the bank has assured anybody that is in that bucket is going to get his refund within 3 days of application. So we don't expect to see any issues around that side. However, the existing BDCs that already have an existing license, yeah, they are still valid businesses licensed by the central bank. And what is just different now is that they are not going to be getting FX from the central bank. If they're able to crouch out their funding for BTAs and PTAs, but they will still operate within the specification of their license, yes, they are still permitted to do that.
Will the latest announcement and action have any impact on the currency inflows via diaspora remittances, which comes to the IMTOs, the International Money Transfer Operators?
I don't think so in the terms of having negative impact on inflows, no. Because substantially those inflows that come into the system through IMTOs are not being obtained at a BDC rate. Rather, people collect that from the IMTOs or from the banks and go and resell at BDC windows for higher prices, and then take the Naira off as their gains. But now that you only have that window, so you don't have that arbitrage market that will be incentivizing people now to go into that round-tripping process. So we expect the inflows to keep coming, because the inflows are meant for certain purposes, particularly the remittances for families and for other businesses that people have here. So if you get, because when these prices are reasonable, inflation is coming down, people have jobs, other things are functioning, you don't even need those excesses gains to beat up those, to go into those what you call cut corners and stuff like that. So you have the value for what you are getting. There's a price that you get for the FX that comes in, which is common all over the system. You don't see another very high price somewhere that you have incentive to say, okay, no, let me take from this market and go to this market. You see that difference is just 1-2 Naira. So why bother, doing those, connections that are just sometimes even very costly for you, and could also be risky in terms of you losing your funds and or getting caught up in
Dr. Mahmud, just quickly back to the banks now that they're going to handle, most likely handle a whole lot more of customers using their window and the bank branches to handle things. So that question we asked earlier in the conversation, what will this be? Will there be an additional pressure on the central bank in terms of monitoring and policing the system to ensure that the banks don't see an opportunity now that the market has moved from the BDCs to them, who are the big brother in the banking space or financial market services place, so that they can now do whatever they like?
For the banking system, and I'm talking of deposit money banks now, the central bank has a very robust monitoring system, both the automated one and also the banking supervision side of it and the examination. And so the banks are just 26 banks in the country. It's different from 5,000 institutions that you need to inspect their books and look at even the books then of the BDCs mostly are manual, and you can't they are not on the automated platform, the FINAs and all the payment platforms of the bank. But for the commercial merchant banks or all the conventional, the deposit money banks, they are very much in the purview of the banks. We see what is going on there on daily basis, per second. We have the electronic platforms where we monitor that our examiners know what is going on in these banks. We can do targeted examination within hours. The people can go to the banks, call for their books, and you have those books because it's mandatory for them to have those books. The renditions are daily. We have platforms where banks make rendition at the end of every day. So the monitoring is and we also have tools to penalize banks heavily when they deviate or they refuse to comply with our standards, and it comes to them at a very, very high cost. So it's not like a BDC that just have a requirement of 35 million and then you can walk away and commit a crime of 100 million and then you just get away. For the banks, because of what is at stake, the stake is a lot higher, and then the central bank also has a robust mechanism to monitor those banks and also to deal with infractions.
Well, the allegations...
I think that on that basis, I think we're good.
Yeah, those allegations of those malpractices announced by the governor on Tuesday were too heavy to be ignored. Tell us more about this. What additional surveillance or monitoring measures is the central bank putting in place on this?
Yeah, you know, some of those allegations are actually things that the central bank has engaged the necessary authorities to address. And this is not the first time the governor is saying it. He said it in several of the past MPCs of, you know, issues around corruptions, around money laundering that is going on the business segments, particularly during those, you know, heavy political periods, and you see those reflecting in the behavior of prices in those markets. And we also see other illicit activities that are going on there. The bank has, you know, raw data and information on this, and they are collaborating with the necessary investigation and security agencies on dealing with this. And the collaboration is still ongoing, and very soon you also hear from the bank how some of these agencies are also dealing with these cases. You've heard of several cases by the EFCC where some transactions are traced to BDCs and people are arrested and stuff. So these are concrete information that we even you in the media space have also reported on several occasions.
Give me one last minute, Dr. Mahmud, about what is likely to change in terms of your monetary policy focus at the central bank and action between now and into the new year 2022.
Yeah, for the monetary policy side of things, in the last communique we mentioned, you know, how things are tapering down positively in terms of the inflation numbers coming down for 2 consecutive months, GDP numbers going on for 2 consecutive quarters now. So the projections are that will improve for the 3rd and 4th quarter of 2021 up into 2022. Indeed, the monetary policy stand is still expansionary. However, the hold that we had now was for the policies that have been put in place since we had the pandemic, particularly from the 2nd quarter of 2021, which included the fiscal and monetary stimulus, the injections that got into the economy to permeate more in terms of creating more jobs, in terms of speeding up the recovery of the economy to reflect the economy back to its pre-pandemic growth rate and beyond. Governor mentioned that for as long as our GDP is still below our population growth rate, we are still not out of the woods yet. So we want to get that population growth is already above 3%. We are still doing less than 1%. So you see that the trajectory is still a long way to go, but the speed of recovery that we expect in this year will take us to that par with, you know, population numbers, and then beyond that. So we'll start seeing the monetary policy tools being more effective as, you know, the crisis period fizzle out.
We thank you for your time this evening, and we appreciate your speaking with us. Dr. Hassan Mahmud, Director of Monetary Policy at the Central Bank of Nigeria. Thank you very much. Have a great evening.